Sempre me perguntam qual é o futuro do dinheiro. O dinheiro hoje representa 40% dos gastos das famílias. É um volume muito expressivo aqui no Brasil. Existem alguns países do mundo, por exemplo, os países nórdicos, onde o dinheiro tem prazo de extinção. Tem países onde eles já definiram que até 2030 não terá mais circulação de dinheiro, somente os meios digitais. Aqui no Brasil, esses 40% são representativos e a nossa expectativa, nós como GetNet, nós acreditamos que o Pix terá um papel muito importante em reduzir esse valor de dinheiro em circulação. Nós não temos dúvidas que o Pix pode ajudar a reduzir os custos. Nós sabemos todos que nós temos custos de transporte de moedas, custos de reposição de moedas, assaltos, violências, uma série de custos, né, que nós chamamos aí de parte do custo Brasil, e o Pix tem aí um objetivo. Então, nós, GetNet, acreditamos que aqui tem uma oportunidade de melhorar a eficiência no Brasil. Nós estamos vivendo no país um momento muito especial. Tem uma série de projetos definidos pelo regulador entrando, como o Pix, como a Lei de Proteção de Dados, como a Circular de Recebíveis, que regulamenta toda a parte de recebíveis digitais no país, o Open Bank. Eu não tenho a menor dúvida que este evento com o Exame pode ser um grande alavancador de um debate profundo e vai ajudar a esclarecer uma série de dúvidas para todas as pessoas e fortalecer alguns conceitos também sobre todos esses sistemas regulatórios que estão no mercado.
Se você entrasse numa máquina do tempo e voltasse 20 anos no passado e contasse a si próprio que no futuro você poderia trabalhar basicamente de onde quisesse, em qualquer lugar do mundo. Você poderia tocar times, projetos, muitas vezes empresas inteiras, sem nunca ir ao escritório. Que você concluiu que não precisaria mais ter carro, já que era mais barato e cômodo contratar carros com motoristas que chegariam minutos depois de você apertar um botão. Ou você poderia fazer uma videoconferência em tempo real, andando na rua com pessoas que estão do outro lado do mundo. E que, por exemplo, nas suas férias, você, que pagaria a conta do almoço com seu relógio e faria as melhores compras sem entrar em uma loja sequer, se hospedaria de forma mais confortável que num hotel, na casa de alguém que você nunca ouviu falar. Bem, você provavelmente acharia que você ficou louco no futuro, ou então que você tivesse, na verdade, 20 mil anos à frente e não apenas 20. O que acontece é que, diante de grandes disrupções tecnológicas, o avanço nos chega cada vez mais rápido, inventando um mundo cada vez mais futurista. Eu sou Marcelo Sampaio, cofundador e CEO da Hashdex, a maior gestora de criptoinvestimentos e ativos blockchain do Brasil. E justamente por trabalharmos com investimentos em tecnologia, muita gente nos pergunta sobre o futuro do dinheiro. Aqui na Hashdex, acreditamos que se nos últimos 20, 30 anos a internet da informação mudou completamente as nossas vidas, nas próximas décadas, blockchain, também chamada internet do dinheiro ou internet do valor, provavelmente mudará nossas vidas ainda mais. Se tem uma coisa que o passado nos ensina sobre o futuro, é que o futuro não é sobre certezas, mas sim sobre possibilidades. Isso em investimentos se mostra ainda mais verdade. E é isso que exatamente nós fazemos na Hashdex. Nós permitimos que investidores de todos os tipos ganhem acesso a esse futuro possível. E tudo de forma simples, completamente segura e 100% regulada. Para nós, é uma grande honra fazermos parte desse evento da Exame, que visa aprofundar essa discussão tão importante sobre o futuro do dinheiro.
A corrida pela inovação está cada vez mais acirrada, detalhada e principalmente personalizada. Na era da experiência, é necessário criar soluções que conversem diretamente com os consumidores, evidenciando de maneira simples como determinado produto otimizará sua rotina e auxiliará em atividades do dia a dia. E nesse cenário, que os smartphones com telas dobráveis ganham destaque e se posicionam como uma forte tendência tecnológica nos próximos anos. Em 2020, com a primeira versão do Galaxy Fold, a Samsung foi pioneira em comercializar no país um smartphone com tela dobrável. Ainda nesse ano, lançamos por aqui o Galaxy Z Flip e nesse segundo semestre apresentamos nossa terceira geração de smartphone com telas dobráveis em apenas um ano, o Galaxy Z Fold 2. A Samsung tem inovação no DNA e, como líderes de mercado, temos a responsabilidade de oferecer às pessoas novas maneiras de se comunicar, novas estratégias para trabalhar e novas formas de se conectar. E seguimos firmes nesse propósito, ouvindo atentamente o feedback de nossos consumidores para continuarmos antecipando tendências e superando todas as barreiras que a vida nos impõe. E é com essa visão de futuro tão instigante e motivador que damos as boas-vindas a todos a esse grande evento da Revista Exame.
Você quer entender como as novas tecnologias impactam a forma como você se relaciona com o seu dinheiro? Continua aqui com a gente no Future of Money. Um abraço.
Muito boa noite, pessoal. Sejam bem-vindos aqui ao Future of Money. Eu sou André Portilho, Head da Exame Academy. Hoje eu tenho o prazer de estar aqui apresentando um dos painéis desse nosso dia para falar sobre criptomoedas. É um dia que a gente está trazendo um line-up de pessoas que são líderes dessa indústria, não só aqui no Brasil, mas também no mundo. A gente teve antes desse painel uma conversa muito boa do Nicholas com o Matt Hogan, que é chefe de research da Bitwise, um dos maiores assets de criptomoedas. Eu vou falar agora com Dan Morehead. Dan, we'll switch to English in a second, ok? Eu estou aqui falando com o Dan Morehead, que é um dos maiores investidores institucionais em criptomoedas do mundo. Logo depois a gente vai ter um painel falando com as principais cabeças das criptomoedas aqui no Brasil, e vamos terminar com chave de ouro falando com o CZ, que é o CEO da Binance, que é a maior bolsa de criptomoedas do mundo. O Dan é veterano no mercado financeiro, trabalhou lá nos anos 90 no Tiger Management, que foi um dos principais hedge funds da época, e foi uma das primeiras pessoas a entender o potencial do Bitcoin e das criptomoedas em mudar a forma como o mundo das finanças funciona. Ele abriu Pantera em 2011, lançou o primeiro fundo de Bitcoin para investidores institucionais nos Estados Unidos no Pantera. Eles têm uma série de fundos, não só para investimento em criptomoedas, mas também para investir em empresas de venture blockchain, ou seja, empresas que estão desenvolvendo uma nova infraestrutura para trabalhar com blockchain. Dan, I did a brief introduction about yourself. I spoke a little bit about when you created Pantera, but I mean, feel free to tell a little bit more to us about why you started Pantera, and then go on with your presentation. I'm here today with the Pantera t-shirt, okay? So that is to say, thank you very much for being here with us. You are one of the greatest investors in this industry, okay? So it's a huge pleasure to have you here, and a big opportunity for our audience to hear in first person about what you have to say to us. We're in a moment that, after the crypto winter, the case for not only Bitcoin, but cryptocurrencies and blockchain, it's again going in mainstream, right? I think right now with much more substance, okay? But again, the stage is yours. Again, thank you very much for being here with us. We're going to do a brief presentation, then we'll do a brief presentation, and then we'll be open for questions and discuss a little bit. Thank you very much, Dan.
Wait, thanks so much for having me. It's great to be here. I would love to talk about why I think this is such an important trade, and essentially why I've devoted the second half of my career to it, and why other global macro managers like Stan Druckenmiller and Paul Tudor Jones are doing it now. And as you said, I spent some time at Tiger Management before founding Pantera in 2003. And the strategy was opportunistic, looking for disruptions, going around the world, finding interesting trades, like Russian privatization or Argentine farmland, or even, Brazilian IPCA bonds, trying to figure out what inflation would be, in the long end of Brazil. And those were all great trades. They're really interesting. Every 2 or 3 years, one of them would come up. And in 2011, my brother introduced me to Bitcoin, and there really wasn't much to read back then. I read the white paper, and there was maybe a page on Wikipedia. And I have some libertarian principles in me, so I was like, hey, this would be great if it happened, but I didn't actually really do anything. And then a year or two later, a couple of my friends that co-founded Fortress Investment Group called and said they wanted to talk about Bitcoin, and I went in essentially just to have a coffee to talk about why I thought Bitcoin would be important. And the coffee itself went for 4 hours, and ultimately just ended up staying in their offices and devoting all of my time to blockchain. And I still think it's that big a trade. All these other things like Brazilian IPCA bonds or whatever, you can make some money, but they're not going to change the world. Blockchain really will. And there's a lot of different ways people get their head around what the opportunity is. I think it's the most asymmetric trade I've ever seen in my career. So, and it's impacting the biggest markets. And the presentation is really a handful of different ways to help the audience see what the opportunity is and why they might want to put a few percent of their portfolio in it, and then some of the cutting edge things that are happening now. And so on the first slide, we have a background of Pantera's blockchain era. We were founded in 2003, but in 2013 we launched the first crypto fund in the U.S. And since then we've launched funds that span the whole spectrum of crypto assets. And in crypto, you do have the really interesting opportunity to buy into the protocol itself. And I'll go into that in 1 second. So those are the token funds like Bitcoin, ICO fund, digital asset fund. And then we obviously have the ability to invest in companies as you did with the early internet and things. So we offer venture funds that are in the crypto space. So one of the best ways to think about what the opportunity is it's a evolution of money. And there's been lots of different kinds of money. There were stone discs in the Yap Islands of the Pacific a long time ago. Then they went to much more dense and rare things like gold. Then governments realized that you could print pieces of paper that were exchangeable for pieces of precious metals. You have currencies like the oldest one on earth, the British pound sterling. It used to be convertible into a pound of sterling silver, and they printed so many pieces of paper, it now takes 184 pounds of paper money to buy 1 pound of real silver money. So fiat currencies, as you've seen around the world, have been debased. Many of them devalue. Of the 200 countries on earth, there's only 13 that have never devalued. So almost every country does devalue their currency. So digital currency is the next thing. It's just the next evolution of money and a much better one. And that's why 100 million people already are using digital currency to store their wealth, to transfer money around the world. And then there are now Ethereum or other blockchain-based tokens that are essentially like digital companies, and we'll get into that later. The easiest way I think to think about it is the internet changed everything we do, from commerce to communication. Basically everything in our lives has been changed. But we didn't have a way to do it for banking or for money. And even in the 90s, Milton Friedman said the only thing that was missing from the internet was an e-cash system. And that's essentially what Bitcoin is. It's a way to move money around the internet. And there's all those other protocols that move all kinds of other bits of data. This is actually money. The really unique feature of Bitcoin, it's the only one of those on that screen that you can actually own a piece of it. If you were investing in the early 90s and you thought, oh man, this internet thing is gonna be really big, I wanna buy a chunk of the internet, you really couldn't. You had to invest in pets.com or some venture company to try and get exposure to the internet. Here you can actually own a piece of it. There's 21 million shares of Bitcoin. There will never be more than 21 million shares of Bitcoin. So if you think Bitcoin is going to be an important transformative thing in the world of finance or money storage or wealth transfer, you can own a chunk of it. Here's another way to look at it. The impact I think it'll have is the same thing that VoIP did on the telephone monopolists. 30 years ago, there was a monopoly in each country, and that monopoly controlled everybody in their country, and they had a copper wire to other countries. And for an American to call someone in the UK, you had to use British Telecom and you had to use American Telephone and Telegraph, and it was really, really expensive. And then we realized you could route voice over the internet, and the cost of streaming Netflix, zero now. It's insignificant, and it's very, very ubiquitous to be able to send data. And money has not yet happened. It's very expensive to send money. If I wanted to send, $500 to Brazil, it's actually faster to go buy a suitcase, go to the bank and load it up with bills and hop on an airplane and fly down to Rio than it is to actually try and SWIFT some money to Brazil. It's very expensive to do that. It should be instantaneous and free, and that's basically what Bitcoin is, or other blockchains. So it's basically money over IP, and it's going to do to finance the same thing that VoIP did to the telephone monopolists. There was a time in the United States where AT&T was 16% of the entire country's market cap. And now no one even thinks about the value of phone companies. They're very low value. That's, I think, what's going to happen to some of the oligopolists that control finance. Credit card companies, remittance companies, banks, have had a huge hold on all the payment rails. And with Bitcoin and other blockchains, you're going to be able to transfer value without using these very expensive middlemen. And this slide has a lot of data on it, trying to show that Bitcoin is essentially an improved function of money. It essentially does everything that gold does, but much better. It does everything that fiat currencies do, either in their electronic form or their paper form. Does everything that Visa, MasterCard, PayPal, Western Union, all those things do. So it's going to take decades, so it's not going to happen overnight. But you can easily see a world where Bitcoin and other blockchain assets essentially eat into, or over time start to replace these other ways of storing wealth, of using currencies as a unit of account, and these very expensive payment systems. And that's why it is such an opportunity. The trade here, and what I used to look at Tiger Management, is looking for trades where your downside is a lot less than your upside, where you can make multiples of what you're risking. And I think this trade is just off the charts in terms of its potential upside. Obviously, it's speculative. We tell friends and investors, only put a few percent of your portfolio in it. I used to tell people because it could literally go to zero. These days, I think blockchain's actually kind of reached escape velocity, and it's unlikely to actually go to zero. But it still goes down 80% every 3 or 4 years. So it's still very volatile thing. However, the upside is absolutely massive. Our first fund is up 15,000%. So it's just returns you're just not going to see in any kind of normal asset class. And this is why, because it's attacking the most valuable assets on earth. Global payments, credit cards, banking, even gold. A lot of people call Bitcoin digital gold. And there's actually a really good book called Digital Gold. Gold's this is actually outdated. Gold's probably 10 or 11 trillion today. Gold's very valuable. It's been called a barbarous relic for a long time. I think Bitcoin will actually supplant it. It's going to take a couple decades for that to happen, but it's starting to happen. And then, of course, money. Not a lot of people really consciously think about money very much, but money devalues. There's certainly huge issues in a lot of countries with currencies. So that's a $100 trillion market that Bitcoin and other cryptocurrencies are going to disrupt over time. And that's one of the main reasons one should have it in their portfolio. Is it's got an enormous upside. It has a 9-year compound annual growth rate of 209%, which is just off the charts. And the reason a professional investor would want to have in a portfolio is it's uncorrelated with anything else. And that's really rare. When I started out, I was a bond trader at Goldman Sachs, and I couldn't care less what was happening in the equity market. And I had no idea what was happening in the commodities market because I just came in and I traded bonds. They were completely uncorrelated. And then Wall Street has been so successful in convincing people of modern portfolio theory that basically everybody has the same portfolio. Everybody owns all the same stuff. So when a shock happens, everything goes down together, including, earlier this year when the economic impact of the virus pandemic became obvious to people. All of the assets went down together. when they really shouldn't have gone down together. Gold probably should have gone way up and equities probably way down. And the reason they all go together is everyone owns the same stuff. Bitcoin has zero correlation to everything else there, and that's why one would want to have it in a portfolio. If it has zero correlation to everything, has a high return, that is the dream asset. And the kind of the downside is that the reason it has very low correlation is most people don't really own much of it. A few endowments have 20, 30 basis points in it, but most endowments have zero. 10 years from now, everyone's going to view blockchain as a real asset class, and it will ultimately be highly correlated with everything else. So here's a bit about what they are and what the opportunity is. So Bitcoin is the first successful cryptocurrency. There have been attempts for decades, but it's the first one that worked. It's really good at moving money around the world and storing value. The important features are it's completely decentralized. You sometimes have bankers and other people calling for the government to shut down Bitcoin. Well, you can't. It's just open source software that exists everywhere and essentially nowhere. There isn't some big company that's called Bitcoin Inc. that you can shut down. Then Ethereum invented the ability to do what are called smart contracts, and it's really just programming money. The simplest way to think about a smart contract is it's like, and it's been used in, say, gambling. If the roulette wheel stops on 00, you pay this guy, and if it doesn't stop on 00, you pay the other guy. That's a smart contract. You can obviously make it much more complicated than that, but it allows you to have a machine essentially hold escrow or do things with money that we normally pay some kind of third party. Like in the example of gambling, you have to pay the casino 15% to allocate money around like that. And then there are new projects like Polkadot, which we're one of the largest investors in, that are allowing much faster smart contracts and interoperability between various blockchains. So it's allowing a whole new world of things to be invented. And some people call that Web 3.0. It's we had Web 2.0 applications, which allowed for things like sharing economies and new browsers and storage and things. But those are all centralized. There's some central company, like Uber or Airbnb, that's taking a huge amount of the value of these really cool inventions away from the users. Web 3.0 are doing decentralized versions of that. They're all in the same businesses, what streaming, sharing economy, all those things. But the hugely important new advancement is there's no centralized rent seeker that's taking value off of all the users of the system. It's just open source code that's doing it at essentially the frictional cost, just the amount it really costs to actually run the system. And at Pantera, we're investing in a lot of these projects. They're really important for the next phase of the internet. Open finance is kind of the next thing that we're talking about now. It's allowing people to do transactions essentially peer-to-peer that in the old days you would need a bank or a credit card company or a centralized exchange to do. And there again, it's just taking out the really expensive middlemen that are taxing the system. We're investing in a bunch of projects along this. We have a little graphic here that shows the the whole stack of all these decentralized open finance applications. As of 4 or 5 months ago, it was pretty kind of esoteric, but it's just recently exploded in people's consciousness. This is a graph of the value of money or cryptocurrencies locked up in these decentralized finance applications. As of 4 or 5 months ago, it's pretty irrelevant, less than $1 billion. It's now $12 billion. Us in the industry, we think, oh, that's awesome because it's gone up 12x. Admittedly, that's still tiny compared to all the major banks in the world and all the major exchanges in the world. But it just shows that things are starting to really happen, and the future is starting to happen now. So the next segment here is just to give you some updates on what's really happening in the industry. The big news lately is public companies are now really engaging Bitcoin and sometimes other blockchains. So MicroStrategy is a public company that originally put $425 million of its corporate treasury into Bitcoin. They've now added another $400 million, so they're almost at $1 billion. You have companies like Square. Square now is soaking up more than 40% of the newly issued Bitcoin. Just one app is doing that. And very recently, PayPal announced they were going to come into the space, and I'll get into that in a sec. Here's just a list of some of the legendary investors that have very publicly backed Bitcoin or talked about their investments in Bitcoin. I mentioned a few of them earlier. To me, that just makes it so much easier for other investors, and especially big fiduciaries like endowments and pensions that need to have their investment committee approve their investments. And the biggest news so far this year is PayPal now is integrating crypto. It's almost 300 million users that are able to buy not just Bitcoin, but a bunch of different cryptocurrencies, Ethereum, Bitcoin Cash, Litecoin, on their platform. And for those of you that have been adherents to the Bitcoin blockchain space for many years, remember there was a very big bull market in 2017. Then it was really, really difficult. Bitcoin exchanges are held to a much higher standard than even normal banks or exchanges would be. So all the anti-money laundering and know your customer restrictions mean that it's very cumbersome for a person to get to buy Bitcoin. You typically have to take a selfie, of yourself with your passport and send it in, wait a week or two, and finally get the ability to buy some cryptocurrency. But now there's 300 million people on PayPal. There's another 40 million on Square and Robinhood that have the ability to just buy crypto. And so I think that's going to fuel the rally that we see coming in the next couple of years, literally just because it is so simple to buy it now. So that's kind of the corporate developments. The huge one I want to go into now is the macro case for crypto. Paul Tudor Jones, Stan Druckenmiller, famous macro investors. That's what I spent the first 30 years of my career doing. And this is really the story, is the response to the economic impact of the virus has essentially been print money. And the US has been one of the countries that hasn't ever defaulted or devalued its currency, but we are quickly heading that way, and a lot of countries are following. So I use the US just an example because it's the country I know the best. In June, the United States printed more debt than they did in the first 2 centuries of its existence. That is, as the picture shows, literally off the charts. It's just an enormous amount. And the unlimited printing of money will push up the price of things whose quantity cannot be eased. The other way to say it is it's pushing down the price of paper money. So if you just keep flooding the world with enormous amounts of paper money, it is going to depress the price of paper money, or it's going to take more pieces of that paper to be able to buy any kind of fixed asset thing. There's a line on Wall Street, don't fight the Fed, and I think you should take that advice here. The Federal Reserve in the United States has promised to double the rate of inflation. And we're just talking about Brazil, IPCA, inflation bonds and things like that. I remember the days when central banks used to fight inflation, and fighting inflation is really hard. It takes decades of concerted institutional work to get inflation to come down. Creating inflation is really easy. There's 150 countries on earth that have been able to do it. So if the Fed's saying they're going to double the rate of inflation, and then they also further said they want to keep it there for several years, such that the average is above 2% over the next 2 or 3 years, that means they're going to have to make it run at 3 or 4% for several years to get there. This is a graph of the inflation rate in some of the developed countries around the world. It's essentially close to or below 0 in all these countries. So all these countries are going to print money, trying to get the inflation rate up. And again, I don't know if it's going to fix the economy. I don't know what it's going to do for unemployment. All those things are very complicated. The one thing I do know is it's going to push up the price of things you can't print more of, like gold or Bitcoin or other currencies. So in doing that, they have to pump up the quantity of money. And this next graph has the money supply growth in a handful of important countries, including your own, Brazil. It just shows that as you print more and more money, ultimately the value of the paper goes down. And the top line here is the money supply of Bitcoin. And that's really the point, is money supply growth of Bitcoin is only 2% per year. And that number gets cut in half every 4 years. So Bitcoin money supply growth is both fixed and very small. And so it is outperforming. It's just, it's supply and demand. It's not surprising that it's outperforming these other paper currencies. The next slide is just a quick update on the impact of the U.S. government. Again, I'm American, I live in America, so I'm talking about it, and I know America gets too much attention, but since it's the biggest money printer out there, it does have some relevance. A divided government where we have one party controlling the executive branch and one party controlling the legislative branch, I think is unambiguously good for cryptocurrency. You're going to have gridlock, and they're not going to be able to pass too much in terms of other fiscal legislative things. And so the Federal Reserve will probably be the thing that has to make things happen. And as they increase the size of their balance sheet, and increases the number of dollars out there and drives up the price of assets. Here is a graph of the total assets of the Federal Reserve and a graph of the price of Bitcoin. It seems to be very coincidental. We'll keep updating this over time. Here's the result in the real world. This is the year-to-date price impact coincident with all this money printing. You have things like oil and commodities going way down because economic activity is lower. You have stocks going up, and there's a ton of my friends, especially old global macro investors, that call me and want to talk about that. They're like, what do you think of stocks? Why are they up? Corporate profits are down 30%. We're in the middle of a global economic, implosion. How could that be true? To me, that's the best proof of my theory that the more money you print, the more pieces of paper you print, the more it takes to buy a unit of the same thing. So 1 unit of S&P 500 now takes more pieces of paper than it used to. And that's doubly true for things like gold, which has been, an awesome store of value for 5,000 years. And then newer things like decentralized finance protocols like Maker. My partner, Joey Krug, invented Augur. It's a essentially exchange/betting platform that's decentralized. And then Bitcoin up 114% this year. And then Ethereum, the second most valuable cryptocurrency, up 250%. And again, that's what we're talking about in terms of being a very asymmetric risk reward opportunity. If things can go up 2.5x in 10 months, that's really different than typical assets that we all used to trade, stocks, bonds, commodities. And then the last slide is just an update on the price of Bitcoin, using that as a proxy for the entire cryptocurrency industry. Anything that's very disruptive, like Apple, if you graph its price, it looks, like a hockey stick. It looks, very vertical. But if you graph it logarithmically, so the exponential growth, sometimes it calms down. And this is the price of Bitcoin graphed over its entire life of 10 years, logarithmically. And it shows it's actually pretty steady. Over time, it grows at 209% annualized growth rate. Obviously, it has some manic bull markets, and they ultimately have bubbles. And then it has some pretty, steep downdrafts. So quite a number of times it's gone down 83% or so. The really fascinating point would be that even with these massive drawdowns, 93%, 69, 83, 83, 61, all these massive, massive bear markets, there's only been one time in history where the low for that year has been below prior lows. So the point with crypto is it's so powerful that even its horrible times, you end up better than you started. There's only been one calendar year where the low for the year has been lower than prior lows. And you typically go in these bull markets that last a year or so. We're getting into one that I think might be like the one from 2014 to 17, where it lasts for several years. But we want to conclude this presentation with saying that we think all the fundamentals and all the technicals are lining up for a major rally. And with that, I wanted to just open it up and answer any questions that are of use to you all.
Thank you very much, Dan. Absolutely great. I think I'm going to ask you some questions that we received from some of our audience, and I'll start with one a little more for beginners, I would say. Okay, and you mentioned that in the past it was very difficult to buy Bitcoin or to buy some cryptocurrency. There's not a lot of a place that you think, well, it's safe to invest, and the process was cumbersome and so on. So two questions on that line. The first is, how do you see this environment, how it changed from 2017 when you have the first peak and from now? I mean, we're seeing the guys from PayPal and so on coming into the field. And the second one, imagine for Brazilian investors, okay, or individual investors that don't have any exposure to Bitcoin or any type of cryptocurrency. What would you say to them? Why they should put at least a part of their savings in Bitcoin and some other cryptocurrency?
It's a good question, and I'd split it on two levels. One, the kind of the retail level, and one, the more institutional size. On the retail level, it was really difficult 3 or 4 years ago to buy cryptocurrencies. You know, it literally took a week or so to get an account at most exchanges. Sometimes they would cap you and you could only do, you know, $500 a week or whatever. And now you have companies like PayPal or, you know, exchanges like Bitso or Coinbase that offer the ability to, you know, buy into these cryptocurrencies. With PayPal, it's instantaneous. They've had so much success with it. They just increased their limit today to $20,000 a week, which is obviously plenty for retail investors. And then on the institutional side, there still isn't an ETF listed in the United States. So our Bitcoin fund is still, I think, the most efficient way for institutions to get exposure. We let investors come in and out daily at the mid-market value-weighted average price for the day, and it's just 75 basis points management fee. So it's a very efficient way for people to get exposure. Ultimately, I think, you know, in a few years, you're going to have ETFs, and, you know, all the major banks will offer Bitcoin funds like ours. So, you know, within a few years, it'll be very easy. Right now, it's, you know, there are other funds like ours that help people get exposure. So, you know, you're seeing an easier way for people to get access to it. And remind me, what was the second half of your question?
Why Brazilian individual investor right now that don't have any exposure to Bitcoin or any other cryptocurrency whatsoever should, well,
so I guess, you know, you have to take the view that this is something really important and new, and it's going to disrupt banking and credit cards and remittance companies the same way that VoIP, you know, did to the telephone companies. And I might be wrong, right? So I'm not saying you should put more than a few percent of your portfolio in it, but the internet did change everything else in our lives, and it really didn't change, you know, finance. And up until just recently, credit cards in the United States were still just a piece of plastic with some 8-track tape glued to the back of it. And now we have a chip, but still that's pretty primitive. And it costs 300 basis points to swipe a credit card, which is crazy, right? Like, it should be like a fraction of a basis point to do an electronic transfer. So it's really expensive to use credit cards. It's really expensive to use banks. And, you know, that's just cutting the cost for people who are currently doing that kind of business. A really important use case for Bitcoin and blockchain is to bring in people that are not currently part of the financial system. And there's a term everyone likes to throw around, that there's 3 billion unbanked people in the world. And to me, that word itself is even an anachronism. It's like calling them unlandlined. You know, they never got a landline. They got a mobile phone, and they're not going to get a bank. They're going to get some kind of mobile money solution. And so for the 3 billion people that have a smartphone but don't have a bank account, those people are going to use something like Bitcoin, either, you know, Bitcoin or Ripple or, you know, some cryptocurrency, and they're not going to get a bank account at kind of, you know, a very standard looking developed world bank.
Yeah, great. We have a question here from Ricardo. I mean, complicated question, but I'm going to ask anyway, okay? This is, if you think governments will accept Bitcoin as a legal currency, or they will ban cryptocurrencies. I mean, I'm not sure which country he's mentioning, But how do you see the regulatory framework developing in
it's a great
the
question.
last year?
And if you would ask me this 6 or 8 years ago, I said, definitely some risk that like the G7 or somebody outlaws Bitcoin and it really doesn't work. We now have more than 100 million people using it. It's just too big now to put away. And in the United States, all the regulatory bodies have ruled on it. The tax authorities have said it's like property, so you get capital gains tax treatment. The banking regulator says the banks can now custody crypto. So it's pretty well set. And as we survey the regulatory bodies around the world, literally 97% of them are either neutral or positive. There's been a couple of countries, very bizarrely, like Thailand and Russia, that have occasionally tried to like ban it or whatever. But those are always very short and they kind of go away. The one country that's always unique is China. China actually has a very positive view on blockchain, and they're trying to create their own version of a blockchain in order to do all kinds of retail commerce on their version. And essentially that started a race, basically. Now that China's going to try and dominate the electronic payment industry, all the rest of the countries on earth basically have to now address it. And then China's announcement was not coincidentally 3 days after Facebook announced they were going to do a blockchain currency. And that's essentially forcing regulators all around the world to essentially stop ignoring blockchain and just kind of deal with it. And it's, essentially, the toothpaste is out of the tube. It's going to happen. And the regulators now just kind of have to, handle it in the best way for their countries. But, an important point that a country like Brazil would recognize is the original instinct is, Bitcoin used to be thought of as really good for, doing bad things like, buying drugs on the Silk Road or something like that. It's really the opposite. There's a permanent paper trail of every transaction that's ever happened. So it's terrible for committing crimes. And one thing it's really good for is fiscal tax collection. So if a country like Brazil that has a huge amount of its economy outside the formal sector were running on Bitcoin, tax reporting would be much more fair, and the rates could be much lower and the collection much broader.
Yeah. In Brazil, for instance, the Brazilian IRS already have regulations on it. So every exchange has to report all the trades that you have on the exchange. So it's going. And I have a question here that should have been, how can Brazilian investors invest in Pantera Venture Fund? I think I know the answer, but you should tell yourself, Dan.
No, thanks. So if anyone's interested in investing, you can go on our website or just send an email to ir@panteracapital.com for our investor relations group. Most of our funds are open to all global investors, so we'd be happy to help you.
Yeah. Another one that I think it's very good for you is that if you think that big companies will born from the cryptocurrencies world, I think you are in a very good position to answer that because you invest in most of them, right?
Yeah, so it is happening now. We've been investing in companies for 7 years, and it took a while, for some of them to get going. But there are now quite a number of companies that are, what are called unicorns, billion-dollar valuations. There's actually a handful that are in the $10 billion range. You have a handful of companies talking about going public, like Coinbase, which we're an investor in, and a few other companies. I actually think the majority of the companies that are in our portfolio that ultimately exit are going to be purchased by larger financial services firms. And, all the banks and the custodians have been, making some tiny investments in the space, but they've essentially kind of waited for this to develop. It's getting big enough now that I think over the next 2 or 3 years, you're going to see legacy financial services firms start to buy up companies in our portfolio. And I think ultimately you're going to see, the big banks or the custodians buying the companies in the space that already have, quite a bit of traction.
Yeah. Dan, Talking a little bit about, I mean, we talk about big companies joining the space. What is the biggest bottleneck in your view in the crypto industry? It is like a more reliable firms jumping in. It is custody. It is like education of people.
Yeah, so you listed a lot of challenges, some of which have been solved. And so custody was a very common reason people didn't want to get into the space. But over the last few years, there have been massive firms like the New York Stock Exchange's parent, Intercontinental Exchange, launched a firm called Bakkt that has all the same infrastructure that New York Stock Exchange and the other 13 exchanges of ICE have. Fidelity now does crypto custody. BitGo is the main custodian within the crypto space. Coinbase custody as well. So you have some pretty large, pretty well-regarded entities doing custody. The last few things that are really holding it back from kind of going to the other order of magnitude in terms of number of users. One was what are called fiat on-ramps, the ability to get from paper currency into cryptocurrency. So from, Brazilian reais or US dollars into, Bitcoin. PayPal and some other firms are really sorting that out. It's pretty easy now to get money in. And the last big constraint would be the two main blockchains, Bitcoin and Ethereum, only process 10 transactions per second. And when this was a science experiment, 6 or 8 years ago, that didn't really matter. But now there's, millions of transactions happening on these networks. And so the capacity is starting to be an issue. And that's called scalability. They're trying to scale these platforms to be able to pump a lot more volume through it. There's half a dozen different approaches to that. And most of them are happening over, say, the next 6 months. So I think scalability will be solved in the short term, but that would be, that's kind of the current bottleneck.
Yeah. Money can provide a lot of different functions, right? Do you think we're gonna see a different range of cryptocurrencies living together, each one acting on a specific function? Let's say for transactions, let's say for store of value, let's say for smart contracts?
Yeah, it's a great question, and I agree with you. Yes, I think there's going to be a number of different important blockchains. And there are some people in our industry that are so passionate, they're almost religious about one blockchain or another blockchain. There are Bitcoin maximalists, as they're called, who think that Bitcoin's the only answer. And to my mind, that's kind of like in the 90s being a Yahoo maximalist. Yahoo was a good company, but there were 30 other interesting companies you might want exposure to. And it's basically the same here. The important point is there are 3,000 different blockchains. In 10 years, there won't be 3,000 anymore. A lot of those are going away. But there won't be one either. And I think it's going to be around 10 important blockchains. Ethereum's really important for smart contracts. Polkadot is important for interoperability and scalability. Ripple is important for moving money across border. So I think you can see, something like 10 different important use cases, each one having its own blockchain.
And you mentioned about the fiat on ramps, that it's definitely one of the bottlenecks. Central bank digital currencies, do you think they can help solving that, as our stable coins are helping this right now, to be easier to not have to moving back and forth from fiat to crypto, and stay just on, let's say, one layer?
Yeah, it's another very important point is that there are lots of different ways crypto assets can work. And we do a lot of investing in things like Bitcoin and Ethereum because, we think they're going to appreciate in value. But you can invest in stable coins, which certainly the whole point is they're not going to change in value relative to the underlying currency, but they have all the other benefits of a token. And for example, the speed of transfer, the borderlessness of them, and the US being a good example. If a very sophisticated Wall Street firm wanted to send $5 million to another very sophisticated Wall Street firm, it takes 3 hours to move the money. Whereas with Bitcoin, you can send it in 1 second. So you have stable coins, which have jumped into that void and provided the ability to move money very quickly. One of our portfolio companies, Circle, has a partnership with Coinbase to do USDC, and that digital dollar is fully backed by U.S. Treasury. So, you have all the stability and certainty there, but you can send it to somebody in 1 second. And so, like you imply, that's great for trading. As we trade currencies and exchanges all around the world, the irony is it's crypto that's instantaneously transferred and very easy to use. It's fiat paper money that's really hard. We're always waiting to move money by wire or whatever. And even that term wire, right? Like it's a copper wire under the ocean. Yeah. That's what it refers to, is, really slow. So stable coins definitely have a huge use case. You mentioned central bank digital currencies. That's a great example of taking stable coins to the highest level instead of USDC, which is essentially an IOU or a token that's backed by U.S. Treasuries. If you had a digital currency that was literally the U.S. Treasury behind it, that would be, even slightly better. So there are lots of use cases, and I did mention Facebook's project. It's a good example that they're trying to do a stable coin, so they're not trying to create a brand new currency that has value, in and of itself and is volatile relative to the dollar or the Brazilian currency. They're trying to, create a currency that's backed by U.S. dollars or backed by Japanese yen, and those have their use cases too. And so I think you're going to see a handful of different types of currency in the long run: stable coins, central bank currencies, and then ones like Bitcoin. And then within Bitcoin and blockchain, you're going to see 10 different ones.
Yeah. Then we are reaching a hard stop here at 7:30. Let me ask you a very quick and silly question. Okay, if you compare the development of the blockchain industry to the development of the internet, we always compare the internet of value with the internet of information, let's say. Where do you think in terms of year we are? Let's say we have the internet starting like in the mid-90s, then we have the bubble in 2000. Where do you think we are in terms of that if you compare?
Yeah, I love that analog. And the point I'd like to remind everybody is it's often said that it took the internet 20 years to happen, because it took 20 years to get to Google and Facebook and Uber and Snap. But they forget it took 20 years just to get to the browser. You just said the internet started in 1993. No, the internet started in 1976.
Right.
And it took 20 years to get there. And then people started using it. And I vividly remember that era. A very, very small percentage of the people were using what we now call the internet prior to the first browser, Netscape, coming out.
Mm-hmm.
And then Netscape made it really easy, and it exploded, and everybody started ending up using the internet. And so I think we're in the very early 1990s. Bitcoin and some of these other blockchains, they kind of do a few things, but it's still really clunky. It's still hard to get in and out. I said it's really awesome that 100 million people use it, but there's 7 billion people on Earth. So we're really in the kind of early 90s internet analog. And things like PayPal are going to help us, bring it out to the masses.
Yeah. Dan, again, thank you very much for being here with us today. I'm going to switch to Portuguese again just to do the end remarks. And let's stay in touch. There's a lot of developments going on here in Brazil as well that I'm gonna update you afterwards. Okay. Thank you very much again for you and everybody at Pantera. Okay. Amazing presentation. Pessoal, agradeci o demo aqui em inglês. Só para lembrar, a gente vai ter mais um painel agora, uma mesa de discussão com os maiores especialistas do Brasil em criptomoedas. E logo depois, às 9 da noite, a gente vai ter o CZ, que é o CEO da Binance, falando aqui para a gente. Se inscreva no canal. Queria lembrar que esse conteúdo vai continuar gravado no canal do YouTube da Exame. Então, se achou interessante o conteúdo, manda para os seus amigos, se inscreva no canal. E, mais uma vez, muito obrigado pela presença, pela audiência. Dan, thank you very much again, my friend. See you.
Thank you.
Bye-bye.